This is a demonstration of exercise 19.4b. Metals Corporation reports pre-tax financial income of $260,000 for 2020, and then the problem lists items that cause taxable income to be different than pre-tax financial income. The instructions ask us in Part A to compute taxable income and income taxes payable for 2020. So to begin with, we start with $260,000 of pre-tax financial income. Then the problem states that rental income on the income statement is less than rent collected on the tax return by $65,000. So that means we need to add an additional $65,000 to determine taxable income. Next, the problem states that depreciation on the tax return is greater than depreciation on the income statement by $40,000. So that means we need to subtract an additional $40,000 of depreciation to get to taxable income. The last item is that there is interest on an investment in a municipal bond of $6,500 on the income statement, and we know that municipal bond interest is not taxable on the tax return, so we're going to subtract that amount to get to taxable income. So we have taxable income of $278,500. The problem states that Metals' tax rate is 30% for all years, and the company expects to report taxable income in all future years, and there are no deferred taxes at the beginning of 2020. So we're going to multiply our taxable income by 30%, and that will give us income tax payable of $83,550 on the tax return. Next, we're going to compute the amount of the deferred tax liabilities and tax assets, because we're going to need that for Part B, which asks us to prepare the journal entry to record income tax expense, deferred income taxes, and income taxes payable for 2020. We know that we had excess depreciation expense of $40,000 on the tax return, so that will result in future taxable income of $12,000. We also had rental income of $65,000 that was more than what was reported on the financial statements. So in the future, that will result in a $19,500 deferred tax asset. So now we have the information that we need to record the journal entry for income tax expense for 2020. We're going to start off by crediting income tax payable as shown on the tax return for $83,550. We're going to debit our deferred tax asset for the rental income of $19,500, and we're going to credit the deferred tax liability for $12,000. So that gives us an amount of $76,050 for income tax expense. We could also check that by taking our taxable income minus the $6,500 in permanent differences for the municipal bond interest times 30%, and that gives us $76,050. The C portion of the problem says to prepare the income tax expense section of the income statement for 2020, beginning with the line income before income taxes. So the income before income taxes was the $260,000. The current income tax expense, which is on the tax return, is $83,550. Our deferred portion is the net amount of the deferred tax asset of $19,500 and the deferred tax liability of $12,000, or a net deferred amount of $7,500, a deferred tax asset. So we see our income tax expense again, $76,050, subtracted from income before income taxes of $260,000, gives us net income of $183,950. The last part, D, says compute the effective income tax rate for 2020. So to determine the effective rate, we take the income tax expense of $76,050 and divide it by our pre-tax financial income of $260,000, and we get an effective tax rate of 29.25%, which is less than our 30% tax rate because of the municipal bond interest of $6,500 that was a permanent difference. And that is the conclusion of the demonstration for exercise 19 4B.